there's someone who is looking forward to learning, excited. Okay, curious. Yeah, it's good to be curious because we're going to be discussing angel investing. Okay, brilliant. Okay, we have 11 respondents. I hope for the next question I get at least more than 11. Thank you for responding to that first question. So the next question is about getting to know each other a bit better. So let me just jump to it. Have you made angel investments? I just want to get a sense of how many people in the room have already made angel investments, just to get a sense of the experience in the room. Okay. Yeah, a number of us are saying they've made some investments. Some are planning to do investing. Okay. Like this. Yes. Okay. So a number have made investments. Okay, that's good. And I'll tell you this as we sort of like keep looking at the results which are coming from this. The masterclass, so it's around angel investing strategy. The good thing about it, it's relevant for both people who've not invested and people who've actually made investments. And the reason for that is you may be doing your own angel investing and probably you've not gone for something as formal as this, just to learn a bit more, you know, because it's all about exchanging ideas.
Yes, I've joined.
Sorry, Gideon, thank you for joining, but we'll request you to mute yourself kindly. I think Gideon is very excited to join our session. But I was just saying that the session is relevant for both active angels and even those who want to start their angel investing journey. I remember before I started investing, I didn't really have a clear view in terms of strategy, in terms of what was I trying to achieve. And I remember when I attended this class first, which was probably in the year 2015 or thereabouts, I learned so much around that. It helped me a lot to think about my strategy for making investments. So let's continue to the last poll question. And the last poll question is, what is a key question you'd like to be answered today? I want just to get a sense of expectation, but I want to ask very specifically, is there a key question that when you heard that you're attending this masterclass, at least when you're planning for it, that you wanted to be answered? Okay, investor readiness. Okay, that's an interesting one. I hope you're asking about how investors should be ready for making investments. Okay, access to deals, opportunities, how people get pipeline. Well, how to get rich. Okay, impact investing. Wow, quite a number of expectations. It seems with Jake, our partners, we may need more master classes because there's quite a number of expectations. What is angel investing? Business access, seeing what is a good investment, the process, the setup, startups, understand about the ecosystem, how to measure success. Okay, some really good questions there, at least ideas to explore. And I can confirm indeed that you're in the right masterclass because we are going to be talking about these different aspects that have been highlighted here. And I like the central word here, which is investing. You want to learn about investing, but in this case, angel investing. So allow me then to just get started with my slides. Thank you so much for participating in that poll. So let me just stop that. And let me just switch, stop sharing my screen here. Go back to my slides. That's okay. Choose. One second, I always need to manage technology when you're doing these things. Okay, so I think everybody can see my screen, so I'll just get started now. Okay, so just getting started. I have I think under an hour. Hopefully we can move things slightly. So as I finish at 10:30, so as I have exactly an hour, and I'll respect my time there. So the table of contents in terms of what I want us to cover today is the first thing is to discuss, just talk about the early stage investing ecosystem. Because it's important just to locate ourselves. What is happening in the early stage investment ecosystem, not only in Kenya, but across the continent in Africa. The second thing is to speak about angel investing and an introduction to angel investing. The third item is we'll start talking about your angel investment strategy. Right? What should you be thinking about when you're talking about your angel investing strategy? And I'll finish by giving you a few minutes for you to try and note down what your strategy should look like in this case. So let me start with the ecosystem, and I think that's a good place to start. So if we speak about the African angel investing ecosystem, there's a number of things that happen. First of all, we have active angel investment groups. We have over 60 angel groups across the continent, and that is as per the data from the Africa Business Angels Network. And I'm the vice president for the Eben. Sorry, I forgot to mention that. I'm the vice president for the Africa Business Angels Network for East Africa. And so we've been trying a lot to encourage angel investing. And one of the strategies we've taken is around having angel investor groups, and then doing a lot of education to those groups so that they're able to then go ahead and make investments. Of course, different ecosystems started at different times. So if you look at some of the ecosystems like Egypt and Nigeria, they started quite early. And I'm sure if you've been looking at what's happening, especially in places like Nigeria, since Nigeria has just taken over in the ecosystem, but Kenya is also there representing very well. But it started almost around 2010, and other groups then kept coming up during that time. There's a lot of capital that is focused in Africa, and I'll show you the statistics of how that has been growing. It's amazing what has happened this year. Even during the COVID year, there's a lot of startups which have gotten financing. And so while when we started out, this was almost an alternative asset class, completely alternative. There's so much that is happening now in terms of people interested, investing in the early stage ecosystem. Every year that is increasing. We started with I think around $300 million, at least when the data started being reported. Now we're speaking about $3 billion. That's a tenfold increase, I think, in just over 5 years, which is quite impressive. So just a few thoughts here in terms of who are the angels, because people ask, am I the right angel? Should I be making investments? I hope you can see my screen here. But there's a survey that was done last year by Brighter Bridges and the Africa Business Angels Network. And it was looking at angel investors across the continent. And so one of the key questions we're asking is, who are the angels who are making investments? And I've just picked a few bits here that I think are interesting. If you want to access that report, you can always go down to this link, and you should be able to access the report. But they're saying that 45% of angel investors are founders.
The screen is off.
The screen is off? Sorry. Let me share my screen again. Apologies for that. Thank you for that. Okay. Please confirm you can see my screen now. Okay, you can. Apologies for that. I think something happened there. So I was saying that the first thing is 45% of the angels they found entrepreneurs, 31% are managers or executives, people who are doing their job, they're senior level etc. 11% are high net worth individuals. 2% are lawyers. I don't know why lawyers had to get their own category, but 2% are lawyers nonetheless. I'm also a lawyer by training, so I guess I'm in that category, and I'm also in the entrepreneurial category. 2% are investors, meaning that they are probably in the private equity venture capital space. 2% say they are angel investors already, and 6% were other. Yeah, I think that's interesting just for us to bear. And the idea is that you can be an angel as an executive, as a founder, etc. Next thing here just to mention is about their source of wealth. And in terms of the source of wealth, I don't know whether you can see this, but I can see it on the side. A significant portion say they are investing their wage. They're working somewhere and they're investing their wage. This is almost, if I look at these numbers, this almost shows around 40% thereabouts who are investing their wage. Then you have the second biggest, chose personal wealth. They've already generated the wealth and now they're sort of like making investments out of that wealth. And then you have earnings from previous exit, a very small portion. And these probably, I would say, 10% or thereabouts. But as we go along, this is one of the areas we expect to grow quite exponentially. As we get more people who've exited their companies, entrepreneurs who've exited, and now they're making the investment. But the important thing here is you can invest from your salary. You can invest from your salary. You don't have to be a high net worth. As we've seen, quite a number of people are investing from their salaries. Okay, so just moving on with the research findings. The other bits around the research findings was around, how much money are these angel investors putting in? And a few things that came out of here. The majority of the angels invest a minimum of $1,000 to around $10,000. Yeah, minimum $1,000 to $10,000. And this was then followed up with the maximum amounts that the angels then look to make investments in. And they say, you know, the maximum they're looking at is around $50,000. So really, you know, 1,000 to 10,000 minimum, going up till 50,000, depending of course on the angel investor. For us as Victoria Business Angels Network, we recommend, and we'll talk about it, that you should have, you know, every year you're making an investment. Once you've decided the area that you're supposed to be in, and we discuss that, then every year be consistent. Whether it's a $10,000 range, whether it's a $15,000 range, be consistent so that you can build a portfolio of companies that you're investing in. Last bit of slide here in terms of the findings, sorry, second last, is around the structure. And this is then in terms of how they make investment. Do they invest by themselves, or do they also invest with other people in syndicates, so to say? And a significant portion say they do both. They have, you know, they work with syndicates. They also make investments by themselves. And then the other bigger group then say they invest personally. They are financing in this case, and then the small portion then invest through syndicates. So still a lot of work needs to be done in terms of getting more people to invest through syndicates. There's advantages of investing through syndicates, and we'll talk about those in a second. The last bit here that I wanted just to mention is the investment type, and this was about what instrument do they use for making investments. And the instruments in this case, those mixed, where they use debt, they use equity, they use convertible notes, they use safes, and so forth. But then the second biggest group then in this case say they invest using equity. But the idea then being mixed. And these are just some interesting findings that I just thought. If you go to the report, there's a bit more detail that you can be able to go through. But at least this gives you a sense that you belong. I hope you feel that you belong after we've sort of like shown some of these findings, and you see what other angels are doing out there. Okay, so let me move on. The next slide I wanted to illustrate was around the tech funding across Africa. And this data has been getting collected over a period of time in terms of how much cash is going into startups across the continent. And if you look at this graph, it was going up all the way, and the amounts are, these amounts are in, 100,000. So $277 million in the year 2015. When you get to the year 2019, the figure is at $2 billion. Of course, as because of COVID last year, the number went down to $1.4 billion. But then this year, and I should put an asterisk here, as at the month of November, the number was at $3 billion. And all estimates are saying that we should cross the $5 billion mark in terms of the funding that is coming to the continent. Now, that should tell you that you're in the right place. Because if people are as excited about this space, and I'll tell you, a lot of this financing, unfortunately, is not coming from the continent. It's coming from international investors. So if they're as excited about the continent, why shouldn't you be as excited? And if you were to then split this amount of funding, you'll see that a lot of that funding goes to 4 key economies, which are usually called the diamond, so to say. And that is, in West Africa, you have Nigeria, you have Egypt, then you have Kenya, and you have South Africa. That's where most of this funding goes. Of course, the other ecosystems have also really caught up. This year, ecosystems such as Ghana, such as Senegal, have picked up quite a bit. And actually, as per the numbers, Kenya is not doing that well in terms of the funding which has been raised this year. But nonetheless, this just tells you the interest is growing across the continent. Okay, so that's just a bit around the ecosystem, and I wanted just to make sure that we get that. So let's see here, I'm seeing Joshua is saying, okay, Joshua is from Brighton, and he's joined the conversation. Joshua, thank you very much. He said we pretty much have crossed the 5 billion right now. There's $200 million deals announced in the last 48 hours. Thank you so much, Joshua. So a lot of interest going there, and of course the team at Bright are doing some really good work in terms of putting some really good research out there that you can be able to consume to understand how the ecosystem is doing. Okay, so let's move to angel investing now, the masterclass. Of course, as I mentioned, if you have any questions, I will keep track of what's happening on the chat as I move along. So let's proceed here. So the basics of angel investing. The first is just what is angel investing? And there you have the key attributes. It's investing your own cash. Other forms of investing like venture capital investing, private equity investing, you're investing other people's money. But here you're taking risk with your own money. And you're not only investing cash, you're also investing mentorship. So you're spending time with the entrepreneur to be able to mentor them in terms of how to grow their business, in terms of connections that they may need, and so forth. And you're making connections also. Right? So you're opening up your network, and that's why angel investing is such a relevant thing in the African context, because a lot of business, as you probably know, is done through relationships. And so, as a startup, and we've had a couple of startups that we've interacted with over time as the Victoria Business Angels Network. When you ask them, do you want us to give you financing or to help you to get deals, to generate business? They usually prefer help us generate business, because that's going to raise financing either way. And so angel investors are almost that perfect investor who does everything. They give you the money, they mentor you, and they give you the connections. So that's a good one. And the second one is why get into angel investing. And there's many reasons why you should get into angel investing. At least I got into angel investing. One is return. One of the startups that exited earlier this year is Paystack. And there's some angels there who was talking about making 30 times, 50 times their money. So assuming they invested $10,000, they got back $300,000 in a couple of years. So there's return to be made. Now, return is not the only the only reason you should invest, because it's also risky investing. So you may actually also lose money, but there's a lot of that. Even some deals like Twiga, just last week or the week before last, we had something under the African Angel Academy, which was around discussing exits. And we're an angel investor who's based here in Kenya. We invested in Twiga very early on, and they made a very decent return out of that investment. Yeah. So there's return. There's giving back. You've seen a lot of founders are investing in other founders, which is really good, because founders feel the pain of being a founder, and they know the challenges you've gone through. And I've discussed with several founders who are looking to make investments, who have made investments, and their key rationale is just, can I also give back? Can I take someone from where I started and at least show them the ropes, so that they don't have to take as much time, lose as much cash to be able to get to that point? We lost screen again. There's something happening with the screen. I don't know what that is. I apologize once again. I don't know why that's the case. I've reshared the screen just in case. I'll keep looking at the chat just in case. So give back, and also there's sectors that you want to create employment, and by being an angel investor, yes, you're generating a return, but also investing in a company that will end up creating jobs, investing in specific sectors, clean energy, and so forth. If you're interested in gender lens investing in women, and so it depends on you. And then it's also very interesting. Angel investing is interesting. And I always joke about this and say that there are problems that I didn't think were problems until I met with entrepreneurs. You're moving along with your life, then entrepreneur pitches you something, you're like, actually that's a huge problem. What did I think it was a problem? It's just interesting that you meet with people trying to solve really big problems, really big challenges, and it's exciting. You're also learning every single day. And I'll share some stories as we move along, but let me just keep moving. Of course, there's reasons not to get into angel investing. It's not everybody should be there. One of the reasons is that you could lose the investment that you've made, and that's why we really recommend creating a portfolio of companies that you're investing in. To do it right, it takes time. So the first angel deals that you make, you may find that you're not as sure about them, but as you move along, you start generating a bit of experience, and the founders to back, the founders not to back, why to do certain things. So it takes time, and so you have to be patient. It's not one of these get-rich-quick schemes where you just put in money and your money multiplies. No, it takes you time to be able to do that and to do it right in this case. And that's why we speak about creating a portfolio of at least 10 companies. Now, the other thing that's important here, as we're discussing, and we're still in this introductory bit around angel investing, the other bit here is just to talk about the different kinds of businesses. Because as an angel, one of the questions you have to ask yourself is, what kind of business do you want to invest in? What kind of business do you want to invest in? And there's different kinds of businesses. On the one extreme, you have the high growth ventures. And I'm just going to use some of the examples I've been throwing around with, like Twiga or like MarketForce, which is one of the portfolio companies that Victoria Business Angels Network has invested in. A company that has grown significantly. We started with it very small. Now it's in multiple countries across Africa. Yeah. It's a high growth venture. You start out and the company really grows really fast. On the other extreme, you have livelihood sustaining businesses. I'm sure there is, just some simple example. Who have, if you walk around, there's informal businesses that you see. There's a shopkeeper that has opened a small business, and maybe if you're from here, there's a relative of yours who's told you, I want to open a business, I want to open a shop. Can you support me? And most of these people, when you look at them, it's not so much about the opportunity they've seen. At times, it's because they can't just find a job. So it's a livelihood sustaining business. And that business will not grow that substantially, unfortunately. And I'll come back to this in a second. And then you have the dynamic enterprise, which are just your typical SMEs. They will grow, indeed. Yeah? But you don't expect them to grow as much as the high growth ventures. They're not as scalable. Now, one of the things about that makes tech really scalable, I don't have that slide here, but a slide that shows how long it took different companies to get to, I don't know, 1 billion users or something like that. It's amazing when you look at tech-based companies and how fast they're able to grow. Dynamic enterprises do not grow that fast, but they will have some growth nonetheless. And then you have niche ventures, which are typically technology or innovative businesses, but they're very niche in terms of what they're looking at. And so when you're looking at this categorization of businesses, what you're looking at is there's three key criteria. The first is the market growth and scale potential, very important. The second is the product or the service. How innovative is a product or service. And then the last item here is the entrepreneurial behavior attributes. Because some businesses may not look like they're very scalable, but if you put a very ambitious entrepreneur, they'll really look to scale that. Like if you look at restaurants, I mean, Java is one of those business models that you can say is not very easy to scale. But they're now across East Africa. It's about the entrepreneur, it's about how they created the business model to be able to scale that. And so really, when you're talking about, at least for this specific presentation, nothing stops you from making investments in any of these kinds of businesses. But the returns will be different for these kinds of businesses. The risk will be different for these different types of businesses. So nothing stops you. But when you're talking about, at least in this context, angel investment, we're talking about the first two groups of businesses. But as I mentioned, nothing stops you from making the other additional investments. Okay, so let's continue. The next slide is just about the value chain of angel investing, or just of investing at the end of the day, and what happens from the beginning till the end. Now, I'm sure you've seen a map that has been doing rounds the last couple of days, which has been showing, I think, the map of Africa, and then it's been showing, I think, Russia, Greenland. I don't know that you've seen that. It's been on LinkedIn and several platforms. And it's showing how Africa was compressed, or at least looks compressed, because the distance from one length to the other is 7,200 kilometers. And then the one for Russia is, I think, 6,400 kilometers. But yet Africa looks like this and Russia looks like this. Now, the real reference that is not because of that, but it's because this journey is not drawn to scale. It shows as though the steps that you take for investing. This is the beginning. You create your strategy, you source for deals, you do your due diligence, you negotiate, and you finally make your investment at this point. And then it shows you that then you take a small time here to monitor and value add, and then finally you exit. Now this map is not drawn to scale, because the journey from this point till this point will take you probably just 2 months or 3 months. But the journey from this point, and I don't know the other people only can see my screen, sorry. Let me just go back here. Sorry, we couldn't. I have to. Anyway, I'm saying the journey on the monitoring and value addition can take you up to 5 years, 7 years, and of course exit happens right at the end. So there's a lot of work that goes in monitoring and value addition. I just thought just to say, map not to scale. It takes longer than that. But just to speak about the journey then here, if you're an angel investor, the journey starts with you then creating a strategy, asking yourself, what do I want to invest in? Or some of the questions that we're going to be discussing today. Which companies, what stage, what kind of return am I looking for, and so forth. Then you want to source for deals. Don't invest in your first deal. And that's why it's ideally good to join a network, or at least to be part of an ecosystem where you can be able to go to incubators and accelerators, look at different deals, and get a sense of what am I looking for at the end of the day. Speak to your relatives, your friends, etc., who recommend different deals, and that helps to get a good sense of what you're looking at. Once you sort of like done your deal sourcing and screening, then you move to the due diligence phase. And this is where you start to find out whether indeed the founder is, entrepreneurs have this ability to paint a picture. So you have to find out whether that picture reflects reality at the end of the day, or at least that you're okay with the picture as is because it reflects the future. So you do your due diligence on different aspects: the technology, the IP, the team that you're looking at. Is that the team you want to back? The product, is the product doing what it's supposed to be doing? All those different things. And once you're done with that, then assuming everything checks out and you're happy to make the investment, then you go to the final negotiation and completion, sign the term sheets, and you make your investment. Once you make the investment, as I mentioned, the hard work begins. Because that's when now the sleepless nights start coming up. That's where the crisis starts happening. One of the deals that we invested very early, we invested in it and we were very happy about it. And we're not done very good due diligence. That's why you learn as you move along. It was a technology deal, we're not done as much tech due diligence. Once we got in, after a few months, the entrepreneur came back to us and told us, we need to redo the whole platform. We said, why? We thought it's a scalable enterprise, a technology platform. They said, okay, it was not that scalable. We need to make it more scalable. And so, we had to then pump some more cash to make it more scalable, at least to rebuild the platform and so forth. That's when, the Excel spreadsheet that you had created, that I don't know, we'll have these users by this point, you realize that they're not moving as fast as you want them to be. But then you have to get involved as an angel investor in terms of opening up your networks to the entrepreneurs so that they can be able to generate the business they're looking for. That's when you get calls at midnight and we're fighting with the co-founder. This guy, I thought you were aligned, we're not aligned anymore. Can we meet tomorrow morning at 7 a.m. because we need to discuss, we're not going to work together. And then you have to act as the referee in this case, or the counselor, to make sure the team stays together. All those things then happen during that time. And of course, that's the time also that you have some really good wins. Right? If you have a good founder, that's when they're winning big deals, they're expanding into different countries. And you're really happy about that when you're hearing those stories that the company that started that was very small is having a lot of impact, or you meet to someone else that tell this company is so that does ABCD, really exciting stuff, and you're like, wow, it's really exciting for you because the founder is doing some really good work. And hopefully, at the end, assuming everything then works out, and not hopefully, actually, if you do the right thing and you keep pushing, you get to the point where maybe there's an exit. There's a new investor wants to come on board, and the investor says, can we buy you out? Or indeed the company itself. Bigger player comes and says, can we buy out the company? And then you get to the point of exit. Now, of course, there's a journey that also happens with the entrepreneur. The entrepreneur is, the illustration we like using is that the entrepreneur is a bus driver and you're a passenger in the bus. So you have to be a good passenger in the bus. You have to encourage. You have to say, if you go that side, there's a pothole, or that's not the best route and so forth. But you have to make sure the entrepreneur is still very aligned and they're very happy about what they're doing. Okay. So that's the journey around angel investing, and still on the introductions here. In terms of the stages of investing, and this is a very important slide. So while we spoke about the different kinds of businesses, we spoke about dynamic livelihood sustaining businesses. If you invested in a kiosk, or I've had even my barber at some point came and told me they want me to invest because they want to open their own shop. Most often, they will not tell you that we need 5 rounds of investing. Once you've made the initial investment, you bought the equipment that's required, you paid the rent, the business works by itself. But for startups, they need multiple rounds of investing. And that's a very important part. Multiple rounds of investing. Which means that the average startup, before they get to the point where they're exiting, and assuming that is in 5 years' time, they probably raise money 5 times. Which means they start, in this case, with a pre-seed. We say they raise this from family and friends, and the other Fs. Then they go to the seed stage, where probably that's when the angel investors are coming in. Once the seed stage has happened, then they go to the venture capital round, where the VC starts coming in because the company is growing. Private equity would also be interested at some point. And then, the idea is that people imagine that, we get to the exit point, where we are now selling the business through an IPO, through a trade sale, whatever that might be. And these are the different stages that then happen. So you need to think about angel investing almost as a staircase. It's like you have to ascertain that you've done certain things at the first level of the staircase for you to be allowed to raise money to move to the next level of the staircase. And then you do certain things, certain metrics, you meet certain metrics, you move to the next level and so forth. Now the problem is that if you don't hit your metrics, it becomes very easy to move from one level of the stair to the next level of the stair. And that's where then there's a cliff. Because if you don't raise money, and we've seen a couple of companies that have had to close down, then you have to close down. And that's how then this plays out at the end of the day. Now, the implications of this, some of the ideas just to pick out of this. So the first is startups will go different rounds, as I mentioned. And as I mentioned, there are 3 to 4 rounds before they're able to eventually exit. And during each of these rounds, there's going to be dilution that happens. So as an investor, you start probably, you invested, you get a 10% stake. In the next round, when the new investors come on board, you probably go down to 7% or to 10%, 5%, and it keeps reducing. Of course, as the dilution is happening, also the size of the pie is increasing. At least you want to make sure the size of the pie is increasing. Because if it's not, then you're being diluted at lower valuations. Yeah. Now, the other thing just to pick out of this is that not all startups will get there. Not all startups will get to the 5th staircase, if you want to call it that. Some of them are going to fall off. Now, the challenge for you as an angel investor is you don't know which one is going to fall off. So, you cannot invest in one and say that I'll put all my money in this one because I know this is the one that's going to make it. It's business. One of the startups that we had a look at a couple of years back, this was before, and I'm going to make a Kenya specific example. What we're doing is that created this platform that would be used by banks and customers of banks. So the idea is that they would go to banks and they would pick out, so as a customer you'd say, I want this kind of loan. And the banks then would have different products. They would almost bid and say that for this we'll charge this interest rate, these are the terms, etc, etc. And they were doing really well until the government decided to put an interest rate cap. And overnight, the business there was the previous year and the next, there was no business because all the products were relatively the same. Yeah, and they had to shut down. Right? And you cannot control for those things. Nobody knows what's going to happen in the future. And so from that perspective, then you need to invest in a portfolio of businesses to be able then to generate your returns. The other bit here just to mention is that it takes time. I think I did mention here, it takes time, 4 to 7 years for you to be able to generate your returns. And the typical funding round is then 12 to 18 months. Okay, so moving on this point of the startups. So if you look at a portfolio of startups, assuming that today you invested in 10 startups, and this is data, it's not corrected for the continent, but at least it's data that you can rely on. They say that in 3 years' time, you'll only have 5 of those companies. In another 5 years, you'll only have 4 of those companies. And by year 7, you'll only have 3 of those companies. And this is to the point I was talking about, having a portfolio of companies that you invested in. Because if you don't have a portfolio, no one knows these 3 companies out of the beginning 10, which ones they're going to be. You have a hunch that this is the one, but you're not really sure about that. And then the other bit that's important here is as you're looking at startups to invest in, they have to be scalable investments. They have to be scalable. Each of them has to have the ability, because assuming that then you end up with 3 only at the end, depending. What you'd like then to ensure is that the ones that have gotten lost along the way, they're going to be made up by the ones that succeed at the end. So each of them, you have to evaluate it and ask yourself, is it a scalable venture that is going to go to the next level? Okay. Vishal, welcome. Thank you. We have one of our speakers who's just joined us. So I mentioned about creating a portfolio, investing in scalable businesses, thinking about, and scalability is about what kind of return do you expect from some of these startups or the companies you're investing in. And here I've just put a number like 10x in this case. And so when you're making your investment, you're evaluating, do I think this company can grow 10x, can generate for me 10x my initial investment at the end of the day. We have another 25 minutes. We're going to run late a bit because we started a bit late. And I like this table a lot in terms of thinking about your returns. Now there's people who think about their returns from the perspective of I want to make 3x, 10x, 20x, etc. And then there's people who think about their returns from the IRR perspective, internal rate of return. And so in this case, the example I make here is that if you're then looking to generate at least a 30% IRR in terms of investing, then the only deals you can invest in will be within this green phase. And that basically means that if you're expecting to exit then within 5 years, in this case, you should be getting at least a 3x return in this. If you're expecting to exit within 6 years, and so forth, it's a nice table just for you to think about when you're thinking about your IRRs and returns. Okay, so let's move now to your early stage investment strategy. And let me just pause for a second and ask, are there questions? But I don't want to have this as a lecture. or maybe a clarification someone would like to just make a comment before I move to the strategy bit. That was just the introduction, just in terms of how you think about this. Okay? Yes, please go ahead.
Thank you very much. Very interesting discussions. I'm just wondering, in the ecosystem, how do you position yourself in terms of influencing policy?
Yeah.
Just like creation the interest capital, just give how do you get around that?
Okay, that's a good question, and I'll do a very quick answer, and then we can have a conversation after this. So there's a couple of organizations that are assisting. So the first thing is to have groups, have angel groups. So Victoria Business Angels Network is one of the groups. There's NIBAN, which is another angel group that's doing some good work, and several other angel groups. What we've done so far is to work with the East African Venture Capital Association. They're currently a lobby organization, and so we're trying then to go through them because they really do quite a bit of work in the ecosystem and use them for that. The Africa Business Angels Network also is doing something at the African level in terms of influencing policy. So those are the two that I think I could speak about. Okay, so let's move on to the strategy here. And really, what we're going to be doing is just answering the next 5 key questions before then we move to the next bit. The first one is, why are you going to be investing? You need to be asking yourself that question. And the other thing that's important to mention here is that your strategy can also change. So it's not that once you set a strategy, now it's a 5-year strategy. As you keep getting more experiences, meeting more startups and so forth, you find that your strategy then keeps shifting over a period of time. But why? To give back, for return, for learning, different reasons. Yeah? But just have a why you're doing this. For instance, if you're, one of your whys is to give back, then there's some startups that you look at that you may not look at if you're just sort of like driven from the return agenda. But the beauty is that I always say, if you're investing in startups, you're going to give back. You're going to give back because it's something that was not there. You expect them to create jobs. You're going to spend a bit of time with the founder in terms of helping them in terms of being able to move. Of course, it matters the sectors that you're looking at also, but generally you'll give back to a certain extent. Okay, the second question is about how much cash. How much cash do you want to put in? Now, per year, in total, how much time do you want to put in? Right? There's a group of angels that are passive angel investors. Ideally, angel investment should not be passivity, and angel investing should not be in the same conversation. You should be an active angel because you're required to mentor, to offer your connections and so forth. But that happens. But how much time do you want to put in? How much time can you be able to allocate in this case? And then what is the time horizon you have for your angel investing? A couple of points here just for us to think about. Now, the general recommendation is, because angel investing is an asset class, 5 to 10% of your total net worth. And in fact, they say total net worth excluding your household, where you live in. So if you own your house, remove that. Everything else you own, 5% of that is what you should be investing in. And that's because you should be investing money that, if you lose, will not affect your existence, so to say. And so we have a very simple example here in terms of how much then you would be looking to make. So there's an element around your total net worth and then how much cash you're generating in a given year. But at least it gives you some bit of a basis in terms of how much should you be looking to make investments into. And so as you're going along every single year, you want to be making a certain amount of investment to remember the point you made around creating a portfolio. Now, of course, there's ways of multiplying the amount of money that you're investing. So if, for instance, you realize that the only amount of money I can put in a year is $20,000, it doesn't have to then mean that you look for only one deal that you can put in $20,000. If you're part of a group, for instance, you can participate in several deals because then you create syndicates and then you can be able to take bets into different deals, so to say. I'm seeing Michael is asking a question: what skill set is required in angel investing? Is it only financial modeling and valuation skills? I would almost argue that those are the only skills you don't require. Okay, pun intended. Well, angel investing, financial modeling, valuation, when you're valuing a startup, what are you valuing? Who knows what the valuation of the startup is? I would say the skills that you need, and we'll get much more out of the panel that you would be having. Number one, you need to be able to generate deal flow. Because if you get the right deals, often that just moves by itself. So you need to be in the ecosystem, you need to be able to then meet with different people, find the right deal. After that, you need to be able to find how do you make decisions in terms of the best deals. How do you know whether the team is a good team? How big the market is? Do you understand the sector they're in and so forth? Yeah. Which is, I don't know whether to say it's a bit of critical thinking, it's a bit of, but it's that ability to spot the good founders, and that happens with experience, unfortunately. The first founder you invest in, they could be a really good founder, but by the time you're doing your 10th or your 15th investment, hopefully from the experience that you've had, you've started figuring out who are the good founders and so forth. Very important skill in this case. You need to have skills around, how do you, I don't know whether it's a skill set, but you need to be one of those people who want to work your network. Because, there's people who have networks, they don't work their networks. Because often what you're doing once you've made the investment is you're doing value addition. Working your networks, your mentoring, so you have business experience in this case, so you know how to tell the entrepreneur, don't focus on this, work on these other bits and so forth. Okay. Thank you, Michael. We'll keep moving. So that's just an example there. And then there's something around how much time should you invest if you're an angel investor. And really, at the end of the day, one statement I like saying is that you create your returns as an angel investor. Of course, you create your returns by making the right decision in terms of the deal that you're going to invest in. That's one. But then secondly, by being involved, by trying to open up your network for the company that you're investing in. And so to that extent, if you're a passive investor, you're better off, going to the stock exchange, or at least maybe you hang around Vishal and he makes an investment. You double down on that because Vishal is very committed to the deals that he's making. Or you hang around Viva because we leverage our entire angel network in terms of making investments. But you need to be involved. At least when you say you need to be involved the first couple of years. And the beauty about it is that you don't have to be involved the whole way out. Because what happens is that once the new investors come in, the VCs and so forth, most often they'll take over and they'll run with you from that point. Okay? Next point that I want to just talk about here, we have 2 more points and then we'll finish. The type of investment and questions you want to ask here is just questions around, where are you going to be making investments? I've had angels who say, they're not investing in companies which are maybe registered locally. The company has to be local, but it's not registered locally because of tax issues and so forth, right? There's questions around where should the company be? What geographical location do you want to be investing in? Leave alone where the company is registered, but what geographical location do you want to be investing in? Now, angel investment is a local spot, most often. Yeah? So you're finding that you're investing in companies that you can be able to add a lot of your network. So if you have international networks, of course, invest in as many companies across the continent and so forth. The good thing that has happened also is that there's angel networks which are looking across the continent. There's something called the Futures Collective, yeah? And they're making investments across. So you don't have to be limited per se by just making investments locally, but at least when you want to make those kind of investments, you want to also make sure that you have other angel investors in those contexts that can be able to add value. What stage? So do you invest at the seed stage, at the pre-seed stage, and I spoke about the different stages at Series A, etc. What stage do you want to invest in? Personally, I like companies with a bit of traction, and you've seen a lot of angels actually like companies with a bit of traction. And they say that, at least at that point you've gotten some testing in the market. The market has given you some feedback. So that's one thing to look for. So it depends. You have to ask yourself that question. Which sectors? Are you going to be agnostic? Are there specific sectors that you're really bullish on? Most angels, as per the report I was referencing earlier from Prior Bridges, are agnostic. But then second to that, fintech is one exciting sector that most angels want to be part of because of the kind of returns they've been able to see. So those are some questions you want to ask yourself as you're making, as you're deciding around your strategy in this case. There's some questions you can ask us around the team size, the kind of experience. You invest in single founders, multiple founders, what kind of experience should they have? Do you want to invest by yourself, with co-investors? There's so many questions to ask around these type of investment that you're going to be making. Then there's the question around the instruments you're going to be using. And for these, unfortunately, nowadays, I find that the markets have become very friendly to founders. So unless you're investing at pre-seed, right, you'll find that most often the deal comes and it's a safe. And as an angel, you don't have the right to say that, I'll do an equity deal or convertible note deal or whatever it is. But I know some angels who, have said that they want to make loan investments. That, of course, locks them out of certain investments. But it's a question you want to ask yourself: which kind of instruments are you comfortable making investments in? I need to understand those instruments. Most importantly, you need to see the tax advisor, because your tax advisor is going to give you a sense of what happens when you're trying to liquidate the instrument that you invested in. Okay, so I will just move on. I will not spend so much time on those instruments. I think we have another, so how we do things under VBAN and even under the Africa Angel Academy is that we have different master classes that cover different aspects. This is the introductory master class that just speaks about the strategy. Just tries to tease out some of these things so that you can start thinking about them. But then after that, you have specific master classes covering different aspects. Okay, I'm almost done here. The model of investing. And here is, are you making investments individually or in groups? And I did mention, there's a different, there's advantages of making deals by yourself versus in groups. One of the deals that we're evaluating this year was a really good deal. And I think we are all aligned. We're going to invest in each as a group. Jason is quite disappointed about that deal. And unfortunately, the group just took a bit of time to finally make up its mind and to get the SP, the special purpose vehicle, put together. And as we were waiting, everybody had their cash. We had a new investor, a big investor come in and zoom in and give a better offer. So angel groups are really good, but they take a bit of time at times just to get everybody to the same place so that they can make the investment. But they have a lot of advantages. The advantage is access to deals. One of the things we like about angel networks, and in fact at VBAN, is that deals don't only come from us; they come from the angels who are part of the ecosystem. And so, someone could be looking at something that you're not looking at, they bring it in. And the good thing about that is also aspects around due diligence. As you're doing your due diligence, it's not just about you. There's also other people that then help in terms of the DD perspective. From a returns perspective, you could argue that when you're a group, probably the return is diluted. It's like you're not eating the whole chicken by yourself. You have to share the chicken into small pieces, so to say. But I think the benefits outweigh that. There's aspects around expertise, diversification. I did mention the aspects of diversification when you're making your angel investing. If you have a small amount of cash that you want to invest, even a big amount of money, $100,000 for instance, you want to make in a year. If you're going to be then part of an angel group, it can give you access to many more deals because you can split it up into different deals and you'll still be able to participate. Because a number of deals also have minimum participation tickets. We find a deal that the minimum participation ticket is $50,000, it's $100,000. So if you have only your 100K, you can only make one investment. But if you put together with other angels, then you're able to make investments. Okay, so there's different advantages. Investing as an individual versus investing in groups. I always advise if you're getting started, please invest in groups first. Even if you're going to be doing your own individual deals on the side. Start by investing with other people. You learn a lot. You take, I guess your risk is diluted to a certain extent because you have many people participating and they're also giving different insights. But that's an important bit. Now, ideally, I would have asked you to spend 5 or 10 minutes to try and just answer some of those questions that we put together in terms of what's your strategy, from what you've just indicated. But I know that we are almost out of time. It's 10:19, and I really want to respect time so that we can start the other session at 10:30. So what I'm going to do at this point is probably just to pause for a few minutes and just see whether there is questions, both online. We have a couple of people who attended this online. We have 38 people online who are attending the session. So if you have any questions, please, kindly, this is your opportunity to ask the questions. I know we're going to have a very good panel session right after this, which is going to also give you some additional perspectives. I'm seeing Alex is online. Alex is one of the other co-founders at the Africa Angel Academy. Alex, nice to have you on board. And a number of other people. So, any questions? Usually I'm this good. There's no questions by the time I'm done. Sorry, there's one. Hold on.
I can't let you get up that easy. So, I wanted to know your opinion. What is the role of angels in really capturing the true value of a startup ecosystem? Can you have a vibrant ecosystem in any country without a vibrant angel community?
Wow. That's a question that needs a panel, I think. And I hope that you start with that when you get to the panel. So I give just my own perspectives around that question. Ideally, you shouldn't. Ideally, you shouldn't have a vibrant startup ecosystem without a vibrant angel ecosystem. but it does happen that you have a vibrant startup ecosystem without a vibrant angel ecosystem. And I just give this example where this research that was done by Brighter Bridges, one of the findings they had, at least most of the respondents they had, and I think they found that most of the angels investing in the continent are not local. So a lot of them are from Europe, from North America. And while that is not ideal, and a number of them also are, especially from in Nigeria, they found that a lot of them are Nigerians who are in the diaspora who are making investments locally. And so then you could argue that, maybe the angel ecosystem locally is not as vibrant, but it's getting a lot of support because a lot of investors who are looking to make investments locally. That's one aspect. The other aspect is that now we also have a lot of VCs who are making seed deals. So they're almost crowding out angels. I just spoke about a deal where we were crowded out, right? And so then that starts changing the situation of the ecosystem. But I guess the point I would make is, I think if you have angels in an ecosystem locally, they make the ecosystem more vibrant. Because, just imagine that, all the deals, the few deals that we're speaking about here that have been invested in, I think across the continent, I saw the number, we're saying last year, the ones which were recorded at least, I think it's something like 500 deals. If you have a thriving angel ecosystem, you have more people who are making investments, right? And that means you have more startups that are getting financed. You probably improve the chances of success in some of these startups because you have someone to hold their hand to take them to the next level. So while we've had some ecosystems look like they're vibrant, so to say, I think they could be more vibrant with more angel investors. But as I mentioned, start with that question in the panel. I'm curious to hear what the other panelists are going to say to that. Okay. So let's see. There's some more questions here. So let's see. How do you deal with issues of valuation in relation to equity investment, especially in early stage startups? Well, I'm compiling questions for you. This is a good question in terms of valuation. I think if you allow me, I'll leave that for the panel. The question is, how do you deal with the issues of valuation in relation to equity investments, especially for early stage startups? It's a tough question. There's no answer. Let's see which other questions I can see here. So, Banji, your question is going to be answered in the panel. Then, how do you marry? Let's see. Wow, there's quite a number of questions here. Jason, how many questions can we take?
3 questions.
3 questions, okay. So let's see. There's a question here around what is risk return profile is different in case of group investments. Okay. So I think what Masafumi is asking is in a group. You could find yourself in a group where the risk profiles are very different for the different angels. So what do you do in that case? Now, just a few points. Before you invest in groups, make sure that you know the other people in the syndicate that you're putting together. At least have a meeting with them and have a general discussion in terms of what are you looking to do, what are they looking to do, and so forth. That's the first thing. We just create alignment within the group. The second thing about this is, I don't think you necessarily have to have the same risk profile in a group. You just have to have the same exit profile. This is what you want to do, how you're going to value add in the startups. Because different people, based on the amount of income they can invest in the early stage, they have a very different sense of risk in terms of how they're going to make the investments. But the most important thing is at least you align on that specific deal and what you're trying to achieve into that. Masafumi, I hope that helps to a certain extent. Let me just move on to the last question I'm going to answer. Is angel investing patient capital? Yes, it is patient capital. Angel investors will not come back to an entrepreneur after 1 year and say, we want our money back. They are in for the ride. Ideally, they should be in for the ride. So it should be patient capital. How do you manage the transaction issue when you have a great idea? Ojijo, I don't understand that question. Probably you can clarify a bit better. Then Rachel is asking, please talk a little bit more about taxation and the company's headquarters. That's the last question I'm going to respond to, then we stop. I think for taxation, I think the most important piece of advice is always ensure that you consult a tax advisor, because there's not enough that you can say about tax without understanding someone's personal circumstances and the kind of investment they're making. Having said that, there's a couple of things you should think about. As an investor, what you're looking at is how much cash am I going to get at the end of my investment? So I've invested this amount of cash. 5 years, if you're exiting, how much cash do I get out? Now, one of the things that affects how much cash I get is, of course, the company's performance. But if you leave that out and just think about the tax structure, if I've invested in such a jurisdiction where there's capital gains tax, for instance, that means I have to pay some capital gains tax. If I'm in a jurisdiction that does not have capital gains tax, I don't have to pay capital gains tax. The situations you can have even double taxation, where the investment is taxed, especially like if you're talking about interest and dividends and so forth, you may find there's double taxation that happens. Or it's taxed in one jurisdiction and it's taxed again to you as an investor. So what I would say is speak to your tax advisor. The most important thing for an angel, as I indicated, is how much return am I getting out of this? And so tax is an important consideration. I think we're going to stop there. There's quite a number of questions in the chat. And I will not respond to those. I think, Jason, do I pass this over to you?
Yes, please.
Yeah. Thank you very much. Thank you, everybody, for the questions and participation.
Thank you so much, Stephen, for that session. I think we have improved our knowledge of angel investing. We are supposed to be heading out for break, and I think for the people online, you will kindly allow the participants here physically to take a 15 minutes break, and then we can come back for the panel session. So I will let the session play you some music background so that as you give us also, as you're online, you can also grab you can grab a cup of tea, you can grab something, some refreshment, take a bathroom break, and then you can congregate back here at exactly in 10 minutes. That is going to be around 10:40. Thank you so much.
Dedicated to investing in female-founded, co-founded businesses in South Africa, and we are a group of 20 women business angel network, or a network of 20 women angels. And then with Stephen and a number of other partners, we've also launched the African Angel Academy, which is an online training platform dedicated to training angel investors across the continent and networking existing angels with one another. And we have trained 212 angel investors since we launched last year, with hopefully hitting at least 300 or possibly even 400 angel investors by the end of next year. So that's our mission as well.
Thank you so much for that. I'll start with a question that I asked Stephen earlier. Can you have a vibrant startup ecosystem without a vibrant angel community, and why does it matter that that angel community is diverse? So I'll just start with you, Alexandra.
Great question, and when you asked it, I was thinking about it. So I think in theory, yes, you could have a vibrant startup ecosystem without a vibrant angel community, but I think you would need to have a very well established kind of government-funded grant system which gave early-stage businesses access to kind of high-risk capital, and you also put into place a very strong mentorship program. So I think you could take angels out of the equation by putting in other mechanisms in place, but I don't necessarily think that it will achieve the same results as an angel investor or a group of angels would, because angels, it's not only about the risk capital that an angel brings to the startup business, but it's also so much more. And the additional value is really in the experience. If you have angels who are successful entrepreneurs and have built successful businesses, imparting that knowledge on how to build scalable businesses to founders, especially first-time founders, is absolutely critical. It's about the sector knowledge as well. It's about the introductions into the market and potential customers, and it really is about kind of the support and mentorship that angels often provide to the startup founders, and then also assisting them to raise follow-on rounds and kind of assisting them in that business growth journey, which I don't think you could easily replicate by other means, but I'm really fascinated to hear what everyone else has to say on the panel in answering this question.
Thank you, Alexandra. Vishal, we were talking earlier around, Stephen was talking about getting crowded out of deals by VCs as an angel. Why is that risky for this market, and what value do you see in having local investors on your cap table?
So I'm not quite sure I think of it as risky. I mean, I think that there is a little bit of a demand-supply equation off of it, that for a founder kind of feels that, look, I'm getting this big name venture capital fund coming in early, why do I need, Stephen's group or Vishal or some other angel, what value is there? And yes, they're local leaders, but I love this shiny Sequoia Capital brand or Target or whatever you have. I think that it is not risky, it's a mistake. And you, as a founder, go through the journey of regulatory risk, customer problems, not being able to scale, not having the experience in your C-suite to manage all this hyper growth, and then realize that actually there's no one by my side. So the founders who get the most value out of local angels and get the most value out of the local angels literally are the second or third time founders. The first time founder is at best romanticized by this idea that a local leader is in the cap table and can add value, but doesn't get as much out of it because they don't try. They don't know how to leverage. They're learning, right? They're also happy to just commoditize everybody and just take the money. It's the second, third, fourth time founder that calls me every day, all the time, is always on my neck, help me with this, help me with that, because they know the value of the network, they know the value of experience and relative sort of market values. I think that's kind of the difference that we see, but I think it is a mistake for the entire ecosystem, founders and investors, and I don't mean angels, I mean true large deep pocket investors, to not get meaningful angels in the cap table early on with an aligned interest to everybody else.
Thank you. I want to talk a bit about sourcing for pipeline. Yoshi, you have a very broad geographical focus. You have a niche focus from a sector perspective. You only invest in fintech. So how do you source pipeline across regions?
Well, maybe just in my experience are maybe two parts. Firstly, I started making business angel investing individually, and I just focus on my fintech because I really wanted to leverage my 30-year SME finance experience for my angel investing. That's one. But at the same time, gradually I started to belong to the business angel communities based in Portugal. The name is Red Angels, I mentioned. So I'm just now trying to do both at the same time, which is better, which is worse. I don't know, that's my present challenge. I don't have the answer now at this moment. But in terms of deal sourcing, because I belong to our business angel groups in Portugal, and I can get some relevant information from deals. There are investment opportunities from such a community based in Portugal. So that's one. And I have just established the new business angel group based in Santiago de Chile. So now we're just starting. getting started. But now we got some deal sourcing resources, local resources in Santiago, Chile, plus some surrounding countries in Latin America. So I don't have a perfect answer, but I'm trying to build up our networks in order to get our investment opportunity, our deal sourcing.
Thank you, Yoshi. Makopa, what do you look for in an investment? Like, what in your experience constitutes a good investment? What are you looking for when you approach a founder or a founder approaches you?
Thank you very much. For us or for me, I normally look at sustainability of the business. How easy is it to how easy is the business? How easy is it to scale up the business? Yeah? Can it grow? Can it? Is it solving an itch? Is it scratching an itch, or is it here to? Is it a business that we? How do I put it? Are we solving a problem? Or are we just doing things because someone is doing it? Yeah. We also look at the people behind the business. Yeah, we're very keen on governance. We're very keen on ethics in terms of, are we going to give someone money and are they going to run away? Are we going to give someone money? Are they going to divert the money to something else? So for us, we look at how scalable is the business, what need is it solving, what need is it meeting, and of course, if we put in the money, are we likely to see success from the point of the principle of achieving his goals or setting out to achieve his goals? And yeah, I think those are the key things. Three key things we look at. Yeah, thanks.
Thank you so much, Alexandra. What motivated you to found Dazzle Angels? Is there a different challenge that women founders face that male founders do not?
So if you look at the statistics on the number of or percentage of funding going to women-founded or co-founded businesses, it is significantly lower than funding going to male-founded businesses, and we wanted to change that. It's not only a significant difference at the venture capital stage, but it's also at the angel stage. And we also, when we're speaking to venture capital funders, they often cited the fact that they really struggle to find women-founded or co-founded businesses to invest into, and that was really because they don't even get access to kind of angel or seed capital. So we saw it as a real gap in our ecosystem, and we have made a number of investments into female-founded businesses. Actually, Yoshi, quite a few of them are in the fintech space. We didn't set out to kind of play exclusively in the fintech space, but a number of our portfolio companies are in that space. And we're just really hoping to kind of change the narrative around and seeing greater gender representation in early stage scalable businesses, and hope to see more female co-founded businesses coming through the pipeline. We are very pleased to co-invest with a number of different angel groups across the continent, so have strong partnerships and with other female-founded angel groups. So what's also interesting is that we've seen Featured Females Invest emerge out of Mauritius. There's obviously Rising Tide in Nigeria, which is fantastic, and seeing another number of other women groups emerging, which is great.
Thank you. Vishal, you've been at it for a while now. What, in your opinion, makes a good angel investor?
Well, the thing is that as time goes by, and particularly if you come from a corporate life or you kind of worked as a seasoned business person, you just become grumpy and cynical, right? It's just the God's truth. So one of the biggest things that I found that improved my ability to invest better was to set aside my biases and to have a far more open mind. So the 23-year-old who's pitching me across from me and tells me he's going to build Africa's next Pan-African bank, 10 years ago, that meeting would end in the first 10, 15, 20 seconds. Today, I'm fighting for allocation. Right? So I think it's a personal awareness and trajectory, taking some risk, not bringing your grumpy, cynical self to every conversation, and being there to support and take some risk. And someone was asking Stephen earlier, you know, how much should I invest? And for me, naturally, the answer for me is you should invest the amount that you're prepared to lose. Okay, now, that no longer is something I live by, just so you know. You must know, I am not prepared to lose anything. I did 33 deals this year. I am not prepared to lose anything. But that is after 12 or 13 years of being able to navigate, and I have a sense of what I want out of the portfolio, how much, because it's not passive anymore. It's not tailing somebody and putting $5,000 here or $10,000 here or $2,000 here or there. I have made this into a late career. And my message to every angel, small or big, is this could be a fantastic late career. Today, COVID or not, I could be sitting in the Maldives or in Dubai or wherever, or in Mombasa on the beach, and have a life and have a career. And that's my message to you all, that you bring your great corporate experience, your world experience, your business experience. You can have a afterlife. And angel investment, if you keep at it, you grow, you learn, becomes a very exciting new career. I'm a fairly good case in point.
Thank you. So besides financial returns, what are your other motivations? Yoshi, I'll let you take this one.
Well, just besides the financial return, in the investment, multiples, how many times? But I just do care about the something more emotional, like I can help actually for this startup. Such kind of emotional things is very important for me. Because I am just an individual business angel, so the investment money is very, very small, tiny money. So in my definition of being a business angel, both are small money and something like mentoring would be quite necessary, essential for startups. That's in my definition of business angel. So in that sense, I'm always looking for the chance to be satisfied about how I can contribute to a particular startup. So that's my daily work, I guess.
Thank you so much, Yoshi. Let's talk about negotiating terms and valuations. What is your approach to it, Makopa?
Valuation is subjective. Sometimes you can just take your hand, put your finger in there and see where the wind is blowing. But it's your approach to valuation.
Yes, negotiating terms, yeah.
We normally play hard and play tough. We of course we have valuation matrices that are out there, the DCFs, the price to earnings, the EBITDA number. There's those numbers people throw out there, but in terms of negotiating, we try and get the valuation is the investor, the investee will have his figure in mind. But when you really look at it, sometimes the figure doesn't play out the way you want. So right now we're negotiating with an IT startup, female startup, and they're looking for. They gave us the price to book multiple is almost 25 times. It was insane. Or rather, they asked the amount of money they were asking for the service, what they needed, or what they needed to do is insane. So we tend to look at what does the business need right now, and look at basing that valuation based on what the business needs now. What the business is looking at 5, 10 years out. Because, for example, someone will come and tell you, right now we're looking for 100 million shillings. Yeah? The 100 million shillings is money that they're going to draw down over 10 or 24 months. But we look at what can we capitalize on now and look at that.
Thank you. Stephen talked about milestone being a determinant about the price, the valuation, also the stage, and how people are willing to offer you. So Vishal, when you think about that, what's your experience? Because I feel like you might not have benchmarks.
You mean at what stage do you invest?
Exactly.
I think it's changed so much and it's really fluid. First of all, the terminology means nothing, right? I mean, this whole idea of friends and family round and founder round and pre-seed round and seed round, bridge round and stand on your head round, it means nothing. I mean, the guy is raising a round, he's raising a round. Where is he, or the gal, where are they in the trajectory of their company? I think if I could sort of go back a little bit to what Makopa was sort of saying, that this whole idea of negotiation and valuation, and it's particularly difficult for my partner and I. Let me give you a background. So my partner Raj Kulasingham, shout out to him, brother of mine, you must find someone to co-invest with. It really helps. He invests his capital, I invest mine. We invest together. We never make a decision without each other. So that kind of two heads rather than one. He's a lawyer. I'm an investment banker. So you think we can't negotiate? We read every line of every agreement. Now, having said that, friction coming into the room, friction coming into the cap table is bad. And the relationship that you're about to create with the cap table should be in the context of how hard you want to go. Because what I want to remind you all and those online is a negotiation of this nature is like a clock face, okay? So at 12 o'clock, when you're negotiating, it's like negotiating to buy slippers in a market. There is one variable, price. So you can say to the guy, go to hell, blah, blah, blah. You know, you can go hard, you can say this, that, you can walk away 5 times, you come back. One variable negotiation. As you go down the clock face and you come down here, you have to remember that particularly in a startup, you're actually negotiating at 11:59. You've got to live with this guy, right? So, and actually who controls the startup? Around ESOPs and dilution and next thing, and will they exit you or not? It's the founder. So you go hard at the very beginning, you'll never get a Christmas card. So look, I'm sharing with you my life's experience. It's easy for sophisticated investment bankers and business leaders and corporate guys that are writing checks to go hard on the young founder. Friction is bad.
Yeah, go ahead.
So, Vishal just reminded me, there is a time we got a deal of a record label. So someone who's a music producer. So we went hard, yeah? And when we walked away a couple of times, we were flexing for the guy, showing him some stick, and he produced a banger. Song hit the airwaves, it was trending all over, and we went back. And because of that friction we created at the beginning, he wasn't really willing to listen to us because now he had clout, he felt he can do this on his own. And we really, we left it, we left really humiliated. And given the biases we had come up with, myself, I have a finance background. The guy who we were co-investing with has an IT background, so we really didn't appreciate the arts and what this game was all about, yeah? And it was a real learning lesson for us. So again, one thing I've come to learn is be humble, be open-minded, listen, learn, relearn, and especially unlearn what you have carried with you all the way.
That's amazing. It's a dance, not a battleground.
Mother, I have a question.
Yes.
Maybe I can go on the mic for just a sec. And especially for and maybe for Vishal and I think Yoshi, Alex, the guys who saying they've done quite a number of deals. What do you think about valuation in the continent? Last week at the Africa Angel Academy, we had an exit panel. I remember Kit was one of the knife capture. They've done quite a number of exits. And they're saying, when you're making investments, it's all song and dance, right? This number of investments have been done and so forth. But then at some point, someone has to buy those companies. And by the time those people are buying, they're not buying them based on the pitch and the song and dance. It's really about the fundamentals of the business. Have they turned EBITDA positive, etc., etc. So do you think the current valuations are sustainable? And should we keep investors? The valuations are going up. I mean, if you look at deals 5 years back and now, they're really going up really fast. So just a follow-up on that valuation question.
Valuation is hard. It's out of control. It's crazy. Nigerians don't get out of their bed for $10 million. Kenyans, the tide mark has gone up from 2 to 5 to 6. Egyptians are not willing to talk to you for less than 12, 13, $14 million. It's out of control. It makes no sense. I can get cheaper deals elsewhere. But rather than, again, back to this whole thing, rather than arguing over, first of all, from a tech-enabled, venture, scalable type of deal, I don't need it to be EBITDA positive. And all of you out there, whether you're writing small checks, big checks, as you're thinking about this, get away from the notion of a pre-seed, seed investment that's going to be EBITDA positive. There's something wrong because it's just not scaling enough. It's a conversation for another day. But the way, for example, I've learned to deal with valuation, and perhaps that's a little more worth sharing, is one, I have a fairly good idea of comparables. So I have a fairly good idea of, how many customers, customer acquisition cost, what's going on, who did what, what's happening in the ecosystem. So in my own head, I have a fairly good sense of comparables in the market. But I would ask the founder to justify and show me valuation comparables. So that's kind of one thing. I was saying in the break to Uthoi that if a founder, and we've had this situation before where a founder says, I'm an outlier, bet on me because of my next year's numbers, then I would sort of say to the founder, as I have in the past, okay, I'll bet on you, but what happens if you don't make your numbers, right? So the other thing is, I love safe notes. So this whole thing of equity, common, all of that stuff, here's why I love safe notes, and there's a direct connection to the valuation conversation, is it takes the friction out of this valuation conversation, right? You sort of say, look, I've got this cap on your safe note, and whether you're giving me a discount or not to that cap, I know my cap is 10 million, so all I have to say to the founder is your next round, you better not do at 10 million or below. And take a view on, are they going to raise the next round at some sort of multiple or trajectory over that valuation cap? And that's all there is. Now, you could introduce, as you get bigger, perhaps get together with other angel groups, you could do something that works for us. We call it the MFN, the most favorable nation clause. I'm happy to share it with all of you. And what it says is that, listen, I want an MFN clause in the contract, meaning if you raise below that 10 million mark or 20 million mark because you've gone and met Sequoia or SoftBank or someone else, and you're going to give them preferred terms, I want those same terms. And that's my downside protection, and my upside has a cap. The rest is just a conversation. right? Who knows? Are they going to be 10? Are they going to be 100? Who knows? But the way you can figure out who knows is by reading the investor update every month, every quarter, and making sure that the founder gives you an investor update. So you could see the trajectory, you could see the movement, and learn about market comparables and digest it yourself.
Thank you. So let's talk about post-investment. How involved are you post-investment? I'll take Alexandra.
Thanks, and I just wanted to echo what Vishal said. We almost exclusively invest using safes or convertible notes, and because it is so difficult to actually accurately value a business at an early stage, so that's something that we do a lot of. In terms of post-investment management and how involved you get, I think as an angel you need to be prepared to spend significant time with your teams, and this is also why having a group of angels I think is a huge advantage, because different people with different skills can then spend time with the portfolio companies depending on what they need. So for instance, if they are presented with an additional term sheet or are trying to negotiate a supply agreement with a big corporate, having someone with a legal background on your team to review contracts and talk them through implications of a contract is critical. Doing a workshop just helping them define their strategy and their kind of reporting metrics is really valuable. If they are needing some assistance with digital marketing, having someone to assist them in setting up their digital marketing channels and processes really does help. So I think that's really the real work starts, and where the time really is needed. It's not the assessing and doing the deals. It's once the deal is done, how do you continue to add value and support that team in growing the business?
Thank you. What is your advice to anyone who's an aspiring angel? I want to go around the panel before we start taking questions from here and obviously online. So let me start with Yoshi. What's your advice to anyone who's an aspiring angel?
I'm sorry, Sam, what's the question?
What's your advice to anyone who is an aspiring angel?
Okay, well, I'm not perfect about the answering to that question, but just very quickly, let me share with the audience my experience within the cultural-based business angel groups. One of them is Lead Angels. I was so lucky that I met the founders of Lead Angels about 3 years ago. Before that, I used to think that the business angel is only for rich guy, but I just changed my mind in terms of the business angel, the definition of business angel. I really wanted to develop my new career as a business angel. Then I started my new career, and within the Lead Angels group, we are all business angels, and we are all shareholders of the company. So how does it work? All business angels belong to the organization, become shareholders in the company for the purpose of group investing. Group leaders are only responsible for screening startups and taking them to the investment committee. The new investments are approval democratically with a vote majority of the business angel. That's kind of an investment vehicle for our business angels, but also it's for it's something like a place where all business angels can learn more and try to develop more about as a business angel for the future. So the one thing is that within Lead Angels, we have very flexible ticket for entry for business and younger business angels. So, well, we have many cases depending on the branches, but chapters. But roughly speaking, the minimum ticket amount is are 50,000 euro for each business angel. So for young business angels for young generation who want to look for a new career as a business angel can easily enter into knock the door to the lead angels. So that's pretty important things. And for the young business angels, potential young business angels, we can provide some learning place where everybody can learn from other experienced business angels. And just thinking about each specific particular deal opportunity and how about market, how about the management power system and the person, how to evaluate the management team, right, like that. So everything get together in such a one place. So everybody make a decision democratically eventually. So that's how it works at Red Angels. So maybe this kind of system could be applicable to other countries, not only in Portugal and other surrounding countries like Spain and Brazil, even Brazil, and also some African countries like Kenya and Tanzania and Uganda, I support. Sorry, a lot of big talk, long talk, sorry.
Thank you so much, Yoshi. Makopa, what would you advise any aspiring angel here today?
Don't be scared. Yeah, don't be scared. Don't get intimidated by some of the ticket sizes people put out there. I mean, Vishal's tickets are quite massive.
Yeah. After many years.
Yes. Be patient and pray a lot. For us, we did a couple of investments pre-COVID that have sort of gone. They're on ice right now, or rather they're on shaky ground right now. So we always remind the principals of those businesses that your work right now is to sell confidence and hope. That's what you need to be selling. Because if you don't, some of us will lose our minds and go mad. Yeah. So be patient. Don't be worried about the minimum ticket sizes. Don't be worried about the size of the businesses or the ask. Do it in partnership. Don't go at it alone. Go at it with other people. I think if you belong into a network, it's easy for you to participate on small quantum, and yeah, the rest will just come through.
Thank you, Vishal. You were put in the spot there, so.
I think it's the coolest thing. You must go out and try and do this. There's nothing to be scared but your own FOMO. I think that you've got to go and find like-minded people and people that know more, right? So go look for the Victoria Ventures, go look for the angel groups, go learn from them before you pull out your checkbook. And then I think that African angels follow them, right? I mean, whether they're angels, super angels, doesn't matter. I get DM'd all the time. Write to me, try me. Say, hey Vishal, I'm looking at this deal, have you looked at it, what do you think? People like me are delighted to work with young angels because no one worked with us. Okay, so Tommy Davis, right? Write to Tommy, right? Write to Idris Baloji, write to E from Futures Africa, right? Write to GB from Flutterwave, right? So write to these people, talk to them, follow them, read Naval Ravikant, okay? Get on to Angel List, get on to Cedars, and look at the deal flow that is on an Angel List. Look at the deal flow on Cedars. And maybe you'll see something, and there's ratings. Maybe you'll see something you like, and you'll invest $500 somewhere, and so the venture community lives on Twitter. Follow the venture community. And if you see where they're bragging and what they're saying, you'll at least see the trends. You'll see why people in Nigeria are investing in Pakistan. You'll see why, you know, people from Sweden are hot and heavy on Rwanda and Kenya, and what are they doing next? So follow those trends, and that would create knowledge. Knowledge overcomes fear, and you'll be fine.
Thank you. Alexandra?
Thanks. So mine is very much an echo of what most people have said. So I join a community, speak to others. People are incredibly generous with their knowledge and their time and their advice. Obviously, I need to do a quick punt for the African Angel Academy. So if you are interested in learning more, you can also sign up for a program there. Then I would say find like-minded investors. Don't go it alone. There's strength in numbers, and it's also, you know, especially if you don't have the time to dedicate to this full time. But I would say also be aware that this is high risk, so only invest what you can afford to lose. I've lost money on my first few angel deals, and it's so that is a real possibility. But also, it's a huge amount of fun. It's an amazing community. I just absolutely love working with all of our startups, and also be prepared to put the time in to really grow your portfolio companies. So that's also something to think about.
Thank you. Now I want to open up the floor for questions. Jason, I'm going to need help with the questions online, but even if anyone here physically has a question for angels, please feel free to direct it to a specific angel. No? The ones here are thinking. What's online?
Does Eben? So maybe this is maybe for Alex. Does Eben have a platform for founders to submit their companies for consideration for possible syndication?
No, Eben doesn't have a platform as yet. There is the Catalytic Fund, so Catalytic Africa, but you need to have an angel investor and also belong to a hub. But there are many other deal platforms. So there is Green Tech Capital's just released one. There's the Venture Capital for Africa platform as well. You can go onto some of the other kind of AngelList applications as well. There's Brighter Bridges has a platform as well that you can upload details around your business. And then if you are an impact venture, you can also load your details on the African Venture Philanthropy Association, because they've also got a matching platform. So hopefully those help.
Yes, thank you for that. We have one from our participant.
Thank you very much, panelists. My question is to Vishal. And I shudder when he said you need to invest in money you're prepared to lose. And at the same time, he said the venture community lives on Twitter. I'm not on Twitter. And I'm not prepared to lose money. But having sat through this morning session, I'm inspired. So I see an age profiling here that is more geared towards the younger generation. How do you reach out to some of us who are on the other side of the century?
Despite my Bollywood looks, I'm no young puppy. So I think folks like ourselves make for really good angels. The more Diwalis and Eids and Christmases that we've seen, the more value we can add to a young 23, 27-year-old founder. I have a founder who just got acquired in a SPAC, on a NASDAQ SPAC, at a $1.6 billion listing. It's like an Uber for buses. It's called Swivel. That founder is 27 years old. He's an Egyptian. That Sheikh Mohammed His Highness from Dubai, had him relocate to Dubai and made him a Dubai company. So there's that trend happening. But it is, I promise you, grown-ups like us who have worked with such founders and added the most value. And good founders get that. So don't be shy of sitting down and talking to them. In reality, I would say a lot of the, and I think I'm from a monoculture addressing our demographic of age, but a lot of the young investors are finding their way. Right? A lot of the young investors are doing it from a culture standpoint. It's cool, it's nomadic, right? There's $1,000 there, there's $5,000 here. They're almost becoming professional investors straight out of an educational background. Now, someone like yourself, who's gone through a little bit of life, a little bit of work experience, makes for a better investor to the founder, for yourself and for the founder. You just have to, like I said, set aside our grumpy, cynical thinking, be a little bold, be open-minded, be prepared to learn. So I don't invest to lose where I am today, but sometimes I write a smaller check for myself to learn. So I know nothing about crypto and NFTs as an instance. And I was one of those people, and if you go and you check, some time ago on Twitter, I put up a message on crypto very cynically that got like 20,000 views, and it was our demographic of age. Everyone was supporting me. All the young guys were spitting at me, right? But I want to learn crypto today, because 4 or 5 years ago, later, it's 65,000 a Bitcoin, or whatever the latest number is. So what I did, as an instance, I wrote a small check on a South African NFT company, which I'm absolutely prepared to lose. It's a learning thing. So think of it as like going to Strathmore for a course, right? But it must work for your pocket, right? You must sort of say, I'm going to learn for $500. Can I lose $500? And then I'll do it. But having learned that, now I know about crypto, right? So then I'll go look for something else. So I do investments in 2 categories, right? For returns and for learning. I have friends who have a 3rd category. Very sophisticated, large venture investors, angels, have a 3rd category, which is outcome, making a difference, contribution. Sadly, I'm not quite there.
On track, on track. Jason, anything else on mind?
Thank you, Alex, for responding to some of the questions that are coming in. But maybe just to add on to what Banji is asking is there, you can talk to networks like ourselves. You can see how we can help you with regards to getting on track on that angel journey. But for now, there are no more questions online unless there are questions here or physical participants. I'll hand it back to Mudoni so that she can close the panel session, and then I can close the session for today.
Thank you, Jason. It's been absolutely delightful to moderate this panel today. Thank you, Vishal. Thank you, Makopa, Yoshi, and Alexandra online. To all the participants who came here physically and those who are online, thank you so much for your time and participation, and have a lovely day. Thank you.
Thank you so much to our panelists. Thank you to Mabami. Thank you to everyone that has joined us here. Thank you to Steven for the earlier session. And most importantly, thank you to our audience and participants. Once again, asanteni sana, and wish you a lovely rest of the day.